Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, drstoxx.com. We've been in business every market day since 2002, if you can believe it, coming up on our 23rd year this October. And if you go over to our site, you're going to find some ways to join me and a whole group of big group of amazing people and amazing traders in my live trading room. We launched this several years ago, and we've got a really great group. Some folks have been with me for several years, and we throw ideas, trading ideas back and forth. And I tell you exactly what I'm trading throughout the day. So if you want to know my ticker symbol, entry price, stop price, target price, reasons for the trade, a nice technical chart, then you can join us over here. Go to the subscribe menu, scroll down to live trading room. And if you want to add on our new, fairly new now, 6, 7 months old live options room, you can do that at a 40% discount. All right, let's take a look at some charts. I told the guys in the room that I don't have a whole lot of time today because there's a lot going on in the market, and I'm feeling a little bit like there's some opportunity out there, but I'm not quite latching on to the best of those opportunities, and we've missed a few. We had a really nice trade in UNH. It was a longer term trade, got out at our target price, and it just kept going higher. And I'm sure UNH is not going to stop until it gets to about 370. In the other room, we had some calls on in UNHG, I think it is. It's the leveraged version of the ETF. That also did really well. But we're also getting out of some things a little bit too early, and we're seeing some really nice runs in like NBIS, one of my favorite stocks, NBIS, which I had a position on. We all had a position on in the room last week. We took profits on it, and then today it was up 50% on some news with Microsoft. We are in IREN, IREN, which is kind of a sympathy play to that, and that's doing well. And over in the other room, we've got calls on in WULF, which people are saying, rumors are saying that it's going to be the next NBIS. So there's just a lot going on, right? It's just a lot going on. And it's a very selective market, I have to say. I think yesterday about 55% of the stocks were red. The indexes themselves closed a bit on the red side. Today, it's again around 50% of the stocks are red, and it's not the same stocks. A lot of stocks that were red yesterday are green today, green yesterday, red today. So it's a rotation tape. There's a lot you have to keep track of, and not always easy to find the sweet spot because the sweet spot is a moving target. So that's why that's all to say that I would really like to kind of get back into my research mode and make sure that we are in or are getting in to some of the best opportunities out there. All right, let's take a look. We'll skip the Dow for now. I mentioned this over on StockTwits and Twitter that the S&P, if it feels like the S&P has not been going anywhere for about 4 or 5 weeks, it's because it has not been going anywhere for about 4 or 5 weeks. Your feeling is correct. Now, it's been in this tight trading range. This is a little bit of an anomaly up here, but every time it gets up to the top, it rolls down to the bottom. It gets down to the bottom, rolls up to the top, gets up to the top, rolls down to the bottom, rolls down to the bottom, gets up to the top. We're back up at the top again, which is usually the place where you see a breakout, right, to the upside. And then we can put this trading range behind us and start a new leg higher. That's the best kind of market to trade. However, we've got some data coming out tomorrow, PPI, we've got CPI on Thursday, and then next week, Wednesday, we get the Powell coming out, and he's probably going to cut 25 basis points, maybe 50, but probably not. And then he's going to tell us kind of a path that he thinks is reasonable going forward. And the market will hitch onto every word that comes out of his mouth because the market is a bit worried about recession, a bit worried about sluggish growth, a bit worried about tariff inflation, and AI is coming online and doing really well, but hasn't yet been completely profitable. There's some headwinds there, and the tariff deals aren't cut yet with China and EU and on and on. So there are all kinds of things the market can worry about. However, all that said, the future still looks really, really good once we get through all of that uncertainty. So I wouldn't be too surprised if we get a little bit of a head fake, right? We get maybe a couple of days up above this range. Tomorrow, let's say PPI comes in on the tame side, CPI comes in line, which is pretty much what the market wants. We get a couple of days of upside and then maybe some selling into the weekend on Friday. And then we get some more weakness coming into Powell because people are worried about Powell. So I think I'm just not that excited yet about playing indexes themselves, as a broad range of stocks, because I think it's going to be still a little bit tight and choppy. Once we get past Powell, this is my map. I think somewhat weak, modestly weak into Powell, and then after Powell, we get a good run into the end of the month. That's kind of the path of least resistance in my mind, but that's a good week away. So we still have a fair bit of trading before we get there. NASDAQ is pretty much the same thing. So here's your trading range. It's a little bit of a broader range and maybe not quite as long in duration, but if you bought the Qs back here in late July, and you're still long the Qs, you're not up by a whole lot. And 2.5 months have elapsed since then. So that's not a trending market. That is a consolidating market, sideways trending. And you know what? It's not a bad thing at all. It's quite a bullish thing, in fact. What happened back here in April, that was the low. I think, in my mind, that ended a 3-year modestly bearish kind of market with a lot of downswings and a lot of fear, panic-ridden tapes. But then that was the end of it. And now we are in a brand new bull market. We had a first leg up. We've got the second consolidation wave going sideways, and a third leg should be imminent. And it probably will be a very, very nice leg indeed, heading off into the end of the year. But we're not there yet. And as I said, we've got data to come out. We've got Powell to worry about. And I don't think the market is going to be all that robust for the next week. Once we get past Powell, as long as Powell doesn't do anything stupid, then I think we'll have a nice rally into the end of the month. Small caps are still kind of a bit problematic, right? There's a lot of bearish divergence going on here at the top. We've got a red day on fairly good volume when the rest of the market is not that bad, right? The rest of the market is either slightly green or the Dow Jones is actually a little bit more than slightly green. UNH is a big part of the Dow, and then some of the big banks are doing well today, so those are driving the Dow higher. It's just a small handful of stocks driving the Dow higher. Most of the Dow stocks today are, in fact, not doing that well, but the ones that are really driving the rest of the stocks higher. So it is a stock pickers market. It's not the kind of bullish market where the rising tide lifts all the boats. It's one of those markets where you've got all kinds of different tides going on, and you've got to find the one that is rising and stay away from the ones that aren't. So stock selection. Now, here's the good news as far as I'm concerned for folks in my room. I have some of the best tools for finding the best stocks in the market. Most of them come from my partnership with Investors Business Daily, Market Surge. I've also inputted some proprietary scanners into finviz.com. And I'm a member of a pro trading group that comes at the market from all kinds of different angles. We've got Elliott wave theory, we've got cycles, guys, we've got technical analysts, we've got professional, what do you call them? CMTs, right? Certified market technicians. We've got CFAs in the group, and they're all professional traders in one form or another. And we bounce ideas off each other, usually once or twice a day. So with those resources, we should be able to find the market sweet spot, particularly if we start to see some convergence among them. And I'll show you a handful of those going forward. All right, I just closed out most of my Bitcoin positions today. I have held Bitcoin for months, and I still am long Bitcoin in our wealth building portfolio in this room. We've got a longer term position in there, and I don't really plan to sell it. But it's just been going sideways and really down here at the bottom of a trading range and not getting much traction. And I don't fully understand why. And so when you're in a trade that for whatever reason is not working out and you don't know why it's not working out, sometimes it's obvious, right? It's in a bad sector, or it came out with bad news or bad earnings, whatever. But sometimes you just don't know. And I would rather stand aside and find something that I understand. Okay. Now I'm a little bit more bullish on Ether, and I still have some Ether positions that we put on several weeks back, and those are doing well. In fact, really well, because we got in we got into ETHT down in the 70s, and it's now near 100, and that was just a few weeks ago. So when Ether moves, it can really get moving well. And I like the fact that it is staying above the 21 period moving average. It's getting tighter and tighter and tighter into this apex. And I think it's just a matter of time. You just have to have some good patience that apex is going to give way to the upside. So I'm bullish on Ether nominally. I'm modestly bearish on Bitcoin for the short term. So I'm going to stay away from Bitcoin. I'm also staying away. For the most part, I have some short puts on MSTX in the other room, but staying away from Bitcoin related plays too, like Coin and Riot and Mara. All right, I keep saying gold is going to have a kind of a haircut coming up here. It's just gone a bit too far too fast, and it's been driven higher by central banks buying. China's been buying a lot of gold. And of course, that can't carry on forever. So I assume that gold is now in fact, I know it is now the most crowded trade in the market. And that's usually when they peak out. When everybody piles in and everybody that wanted to get in is bought, then the market can only go in one direction, and that's down. So I am looking for gold to get a little bit weak. I thought that was the bar right there, right? That was a reversal bar with bearish divergence, and it was right back up again the next day. So just going to wait on gold to get a better sell signal. All right, I do think oil is probably going to rally off the lows, but I don't think it's going to get all that far. And the 10-year yield is back up again. It has been falling, with bonds going through the roof. And even with a good 3-year auction this morning, one of the best in years, bonds can't catch a bid today. They are reversing. So I think a short of bonds with a TBF, is it TBF? No, TBT, TBC. Anyway, there's a 3x bear version of the bonds out there somewhere. TBT, I think, is a ticker symbol, and that might be in play in the next few weeks. Okay, I'm going to go quickly through the big mags. Right, these are the biggest companies on the planet. They're also at the top of the NDX and top of the SPX. So if they're not happy, the indexes aren't happy either. And sometimes the whole market can be catching a cold, but if these guys are strong, the indexes go up. And I think it's kind of happening today. So let's go worst to best. We've got Avigo topping out a little bit. It was way up on earnings. Big slash. Inside day bar looked promising, but it's another gap and crap today. So it's kind of a no-go zone for me. Apple has had a very nice run, but I do think that's about it for now. It needs to come back in, close the gap, test the 21, maybe even. I don't think it's going to get this far, but maybe come down into this area around 224, 223 to test some of the bigger moving averages and the top of that trend line. But I think more likely it's just to pull back into about 228. Now, we are long now. It's been doing well. We bought it down here at the bottom on the rounded bottom breakout, and it did get up close to the 200. This is a recovery play for us. So we're just going to hang on to this for a while, but it's getting some good traction. It's not a swing trade yet here because of the overbought condition. But if it can hold up near the highs of this range, I think it has a good chance of getting higher, especially if the NASDAQ goes strong. Let me go through a few more. So we have a little bit of NVIDIA in both rooms. We're in a covered call in this room, and we've got some calls in the other room. And I think it's just a matter of time, right? We got down to test. We closed a gap. We tested what I would call a supply zone. And maybe I can show you that. Is this going to pick it up? No, it's not. Came down here, tested a supply zone, which is to say an area where a lot of buying usually takes place and nice bounces take place. We got very oversold, and but it hasn't done a whole lot since we got into this position. So we're kind of waiting on NVIDIA to catch a good bid. There are some other semiconductors that are doing well, for example. So AMD, which we are long in both rooms, is printing a 3-bar reversal. It's up here at the highs of the day. And it's down in a falling wedge, which tends to be bullish once it breaks out to the upside. Volume's a little bit light, but it's light all across the board. People are not out there buying hand over fist today. I was wrong about Google. So we had a nice Google play on last week, and we took advantage of this big pop. But then I got out thinking that that was it for a while, and then yesterday printed a very big um, classic reversal bar. Right, classical reversal bar opens inside the body of the previous day, rallies up to take out a whole bunch of stops and trigger a whole bunch of panic buys from the shorts, and then it comes right back down to close not only below the open but within the bar of the previous day. That's exactly what it did yesterday. These usually see follow through. There was a little bit of follow through off the open this morning, and that's about it. Right back up again. It's too high right now to do anything with Google other than just hold it if you're already long. I have some Google in my long-term account, and I think it's a great long-term hold, and I don't want to sell those shares ever. I just want to hand them on to the kids. So we had Facebook calls, and we got out yesterday on this nice little pop, and it's right back up again. Right, so it looked a little bit like it was a toppy yesterday in the options room, and so we did take a very nice profit, about a 45% profit after just a couple of days, and then it's right back up above where we sold it. We have Netflix on in this room, the live trading room. We're using a leveraged ETF, and I do think this is a good setup, right? So here's your pullback trend, broke out, then it went sideways, right, which is actually better than coming back down and testing the top of the RTL, the resistance trend line. It never did that. It did print also this nice looking volume shelf down here. Lots of dips down into that area, bounce back up, dip down, bounce back up, dip down, bounce back up. That's what these long tails are about. And then we had the breakout move on late last week, a little bit of consolidation and follow through today. It's just a great looking stock. It's not the best setup out there, not the most bullish setup out there, but among the mags, I think I'd probably like this one the best. Amazon is a slow-moving, trending stock. It looks great. It was up a few days ago. I don't know why Google and Amazon. There was some kind of it was the antitrust legislation or the antitrust lawsuit that was canceled in their favor. So both stocks shot up way up, and we were in Google when that happened, thankfully. But it is printing all-time highs today. I think Amazon is just a great stock to hold right now. It's just going to slowly move up, couple of days up, couple of days down, couple of days up, couple of days down. Slow gains all along the way. I think Cisco has earnings. Am I wrong? I am wrong about that. Is it Cisco or Oracle? Oracle is out. Oracle is out tonight. I like the setup of Oracle. It's a bullish setup. It's a pullback, a breakout, a hold above the 21. Everything there looks bullish. As a new swing trade, you could really get your teeth around this setup right here. The only problem is anything can happen on earnings. I would wait until after earnings, and by then it's probably going to shoot way up. I do think Oracle is going to do well. Yeah, I don't see how they can't do well unless there's something that the company's been hiding from us. So Tesla is not in a good place right now, as far as I'm concerned. It's printing this. It did have a nice breakout, and it came all the way back. See how that's what I mean? It comes all the way back to test the top of the RTL. That's not a bad thing, but if you don't do that, that's a good thing. That's even better. It's even stronger. That's what Netflix did. Came all the way back and tested nice, strong, big volume, 3-bar reversal back higher, printed another higher high, a higher low, a higher high. And so all of that action there looks good. The problem is when we go back, we're going to see that we're getting potentially lower lows and higher highs. That's an expanding range. And that tends to be a little bit problematic, especially when you get all the way to the top of them, because the next move is possibly all the way down to the bottom of that range. So you don't want to get caught in Tesla. I just think it's probably going to churn sideways for a while. There's some headwinds with the company. Production numbers not good. Sales numbers not good. It's just not firing on all cylinders. So I would just wait. Microsoft, keep waiting for this guy to get going. And when it does, I'm pretty sure we'll be long in the wealth building portfolio. But every time I look at it, I keep saying It's not ready yet, not ready for prime time. Okay, those are the megs. Let's take a quick look at some on my greens list. So these are stocks that I like for whatever reason, um, and that are either at a buy setup right now or are near a buy setup. Let's take a look at some of these. Some of these were already long. Soon, so we were in soon in the the options room. We had calls. We got out of them yesterday, and not quite at the top, but it was starting to come back down. And we got out, and I'm glad we did because that's an inside day, a bearish inside day bar at a lower high. Not that that's the end of it, but it doesn't look good going forward. So I'm actually going to take this off my list. I had it on this nice rounded bottom and a recapture of the 21, and that's where we got into those calls. And now it's a little bit past its prime. Rocket Lab. So we're doing a wheel play on this one in the options room, and we've made full profits every week. We've been in 4 weeks now. We're selling puts, and then when we get put the shares, we sell calls, and then we get called away, we sell puts again. And right now we are in the calls, I believe. And yeah, it's just doing great. Now it's a bit on the volatile side, right? Bit on the volatile side. So this big red stick is what put us into shares, but it's been up ever since. So here's another good example. Breakout of the pullback trend, come back and test it, 50-period moving average as well, and then a nice bounce, nice clean bounce off of that. This looks good for higher. Snow is doing a big up on earnings, hasn't closed the earnings gap. That's a power gap, a revaluation of the company. I like that. And it's doing this little, I don't know what you want to call it, a bull flag or a pennant or just a simple pullback. It's not quite ready for breakout, but it is getting very close to that. I really like this one as a good, safe play. I'm forgetting what it is, what the product is. It's something healthy, like healthy soap, or it's a chemicals company, but they make healthy stuff for healthy products. I'll just leave it at that. Anyway, it's not ready either. This one is not ready. I thought it was ready yesterday because it gave us a nice reversal bar on very good volume, and then it's right back down again today. Good example of what I'm saying. It's everything can look really good on Monday and not so good on Tuesday, and the ones that looked bad on Monday are looking good on Tuesday. So it's just that kind of market. You have to be very nimble. OUST, we don't have any position in this one, but I keep eyeing it, and every time I look at it, I think, okay, we need to get in, and then I take a look at it a little bit later, and I think, no, it's not quite ready. But this is getting very tight, right? Very, very tight. 5 or 6 days in a row in the pink zone of an uptrending LRC above the 50, right at the 21, just below the RTL. This looks ready for breakout, and I'm sure it's going to squeeze like crazy because there's probably a big short position there. Howmet is your best of breed in the defense aerospace space, and it also did a pullback. It has already broken out, doing a little sideways churn. You could start it. You could start it right here. I don't think it's going to come back and test the top of the RTL. I think it's just going to consolidate and then print another leg higher up to 200. Zscaler is a cybersecurity play, and it did break out yesterday. It's not really following through today. It did this morning, and it sucked a lot of folks in, but it tagged the 50-period moving average and has recoiled. So we better make sure now with the bearish divergence showing up there, we better make sure that that is a real breakout. It could be a trap. We're in SOFI, and it's just doing its thing right up there, right up against all-time highs. Nice little apex setup here. Even if it comes down and tests the 21 again, I think we can just hang on to this and wait for the next leg higher. It should be up above 30 soon. Lamond is a disruptor in the insurance play. Nice big pullback, big green stick yesterday in a weak market, and took out a bunch of range highs above the 21 on pretty good volume, at least better than the day before. A little bit of follow through today. I wouldn't say it's that bullish today, but we'll have to wait and see. The fundamentals on this one are a little bit iffy, but there's a lot of good. It's kind of like a cult stock, right? It's kind of a meme stock. A lot of folks that really like Lamond, really like Lamond. So Hinge, this one I keep talking about in both rooms, and we did have some calls on, I think, at one point, and it's just been coiling. Look at all these green bars. Look at all this good volume coming in. Coiling, right at the 21, just below the RTL. Today is the moving day. So This is a brand new breakout. I think here's how you play it. You nibble maybe a quarter position at current price. You put your stop below this range around 53.60. And if it gets up above the today's high, you add a little bit more. Or if it comes back down and tests the top of the RTL, right, as you extend it out, if it tests it somewhere around here, around 55.80, you'd add a little bit more there too. All right, Dash is good. It's a little bit late now to get on board, but this I posted this one on the social media boards almost every day last week, and I'm not in it myself. I'm kind of kicking myself. I think it was that red bar there that discouraged me from getting on board, but I like what it's doing today. This looks really good. And what's going on in the company is also good. It's everybody's using DoorDash now. Everybody. Okay, let's take a quick look at OKLO. I promised that. So this is a very tight apex setup, and this is, I wouldn't call it best of breed, but it is one of the 3 or 4 names in the nuclear space that you need to know. And of course, that's a space that has a lot of demand from AI and data centers. And OKLO has already inked a number of good contracts. I'm sure they'll be inking more. If they start getting some government contracts, look out, because this is going to skyrocket. It's a small float. I'm not sure what the short is, but it could really squeeze nicely, can move very fast. We're in calls in the other room, as I said. I think this one is ready to blow higher. This is a big moving stock, VSAT, and it's a satellite play. Last time it looked like this, right? After a big run higher, it little sideways, consolidation flag pattern, and really bust loose on a squeeze move up to I think that's new all-time highs. And now it's doing the same thing, right? A little consolidation down to the 21. Big green stick yesterday in a weak market. Follow through today. This looks great. The first day above the RTL is usually the day you want to get long. And I think we'll be long this one in one of the rooms by the bell today. All right, I'm running out of time. Let me just do a couple more. So Rigetti is, in my mind, the best of the quantum computing plays. And here's your pullback, your bounce off the 21 and 50, and your peak breakout today, but I'm not sure that's a real one. We'll have to wait and see. CoreWeave is running in, it bumped up quite a bit. I'm not sure it's a buy here, but it's a fun stock when it does this over here. And I did buy a little bit last night on the news of NBIS, thinking that CoreWeave would move in sympathy, and it did, but it's not moving nearly as nice as NBIS. We are long IREN, which is one of my favorite buy and hold kind of stocks right now. I think it's got a great future. It is already up to the top of the range. We bought it down here. It's already up to the top of the range because of the news. And I'm not sure it's going to do a little pullback that I thought it was going to do a little pullback, maybe under 28, but it's already up above 30. And it looks to me on that volume like it just wants to keep going. So I would buy shares here, even though it's not a good swing trade setup, but just for the longer term. Last one I'll show you is WULF. This is a sympathy play with NBIS, and there is your breakout. So we're long calls in the other room. All right, guys, I'm going to let you go. Sorry I can't do chart requests today, but I really am trying to keep it short so we can get as positioned profitably as possible. And I'll just say God bless everybody. We'll see you back in the room in a little bit. I'll produce the video, send you a link, and we'll go from there. Bye for now.